Hello everyone. We're here today to discuss some critical policy updates from AmeriHome that will directly impact your daily operations, particularly concerning mortgage underwriting and compliance. These changes cover several key areas, including limited and no cash-out refinance requirements, home possible eligibility criteria, and the definitions of acceptable gift donors. It's essential that we all understand these adjustments thoroughly to ensure that every loan you process moving forward is in full compliance with the latest guidelines. As a quick reminder, don't forget to download a copy of this presentation from my training website so you can print it, study it, and make notes. The link to the training website is on the screen and in the video description. And if you enjoyed this training, be sure to subscribe, like, and comment. Your feedback helps us grow and reach more agents like you. Today's agenda is structured to provide clarity on these significant policy updates. First, we will delve into the new tangible benefit requirement, which now mandates documented proof of a financial benefit for borrowers engaging in limited and no cash-out refinance transactions. Following that, we'll cover the Home Possible program updates, stemming from FHLMC Bulletin 2026-1, which introduces substantial changes to eligibility and income requirements. These updates are effective as of April 12, 2026. Finally, we'll discuss the Acceptable Donors Update, where FNMA SEL 26.01 expands the definition of who can provide gift funds to include non-relatives with established familial-like relationships. Let's begin by focusing on the tangible benefit requirement for refinance transactions. This is a critical change designed to ensure that all refinance activities genuinely serve the borrower's financial interests. The new documentation standards require a clearly demonstrated measurable benefit to the borrower for these transactions to be eligible. This means that for every limited or no cash-out refinance, we must be able to articulate and prove how the borrower directly benefits from the new loan. It's not enough for a borrower to simply wish to refinance. There must be a tangible improvement to their financial situation that we can verify. Specifically, for both limited cash-out and no cash-out refinance transactions, a documented tangible benefit to the borrower must be provided at the time of underwriting. This ensures the refinance serves a genuine financial purpose. Two primary benefits are highlighted: a reduction in rate, where the new loan must result in a measurable decrease in the borrower's interest rate compared to their existing loan, and a reduction in term, where the refinance must shorten the remaining loan term. For example, transitioning from a 30-year to a 15-year mortgage. Loans lacking this documented tangible benefit will not meet policy requirements and cannot be approved. This emphasizes the importance of thorough documentation and analysis upfront. Moving on, let's address the significant Home Possible program updates. FHLMC Bulletin 2026-1 introduces material changes to the Home Possible mortgage program, which are crucial for loan originators to understand. These updates will apply to all applications received on or after April 12, 2026. It is vital to prepare for this effective date, as applications submitted before will operate under the current guidelines, while those submitted on or after this date will be subject to the new rules. This transition requires immediate attention to process changes and communication to ensure a smooth transition and continued compliance with Freddie Mac's guidelines for this important affordable housing program. FHLMC Bulletin 2026-1 outlines three key changes to the Home Possible mortgage program, effective for applications received on or after April 12, 2026. First, super-conforming mortgages are no longer eligible. Underwriters must now verify loan amounts fall within standard conforming limits. Second, unsecured loan proceeds are no longer acceptable as a source of funds. This means down payment and closing cost funds must come from eligible, documented sources only. Finally, base earnings must be considered first when calculating qualifying income. Both non-fluctuating and fluctuating base earnings must be fully considered before any additional employment earnings like bonus, commission, overtime, or tips may be factored in. Let's expand on the income calculation changes for the Home Possible program. Previously, additional earnings like bonuses, overtime, tips, and commission could often be layered alongside base income without a prescribed order. The new rule establishes a mandatory sequence for income analysis, providing a more structured and consistent approach. This sequencing starts with Step 1, base non-fluctuating earnings, covering salaried or fixed hourly wages. Step 2 then considers base fluctuating earnings, such as variable hourly or part-time base pay. Finally, Step 3 allows for the inclusion of additional earnings, which encompasses bonus, commission, overtime, and tips. This structured approach helps ensure income stability is prioritized. To reiterate some important points about the Home Possible program, loans exceeding standard conforming limits, classified as super-conforming, will no longer be eligible for the program after April 12, 2026. It is imperative to verify loan amount eligibility early in the process. Furthermore, unsecured loan proceeds, such as personal loans or unsecured credit lines, are no longer acceptable sources of funds for the Home Possible program. All funds used for down payment, closing costs, or reserves must come from verified eligible sources. While gift funds, savings, and retirement funds remain acceptable, they are still subject to standard documentation guidelines. This clarifies what constitutes acceptable financial backing for these loans. Now let's discuss the updated definition of acceptable gift donors. Per FNMA SEL 2601, effective February 4, 2026, this update significantly expands who qualifies as an acceptable gift donor beyond traditional family relationships. This change reflects a more contemporary understanding of family and support networks, providing greater flexibility for borrowers who receive financial assistance from individuals outside of immediate blood relatives. It's crucial for loan originators to familiarize themselves with these expanded categories to accurately advise borrowers and process gift fund documentation in accordance with the new guidelines. This can broaden the pool of eligible borrowers accessing home ownership. The expanded acceptable donor definition under FNMA SEL 2601 includes several new categories. These now include domestic partners, recognizing individuals in committed relationships akin to marriage. Engaged partners are also acceptable, acknowledging those planning to marry. Former relatives, such as ex-spouses or step-parents post-divorce, are now permissible under specific conditions, highlighting enduring family ties. Finally, individuals with a long-standing familial or mentorship relationship can now be considered. This category recognizes deep, meaningful connections that have existed for an extended period, where the donor has demonstrated a consistent commitment to the borrower's well-being. This broader interpretation allows for more diverse sources of gift funds. To recap our discussion and outline next steps, make sure you review all updated refinance policies so every file satisfies the new tangible benefit requirement. For Home Possible loans, keep the April 12, 2026 effective date for FHLMC Bulletin 2026-1 in mind, confirming income calculations and fund sources meet the revised standards. Update your gift fund verification process to match the expanded donor definitions in FNMA SEL 2601, effective February 4, 2026. For any questions or clarification, contact your compliance or operations team. As a final reminder, download the presentation from my training website so you can print it, study it, and take notes. The link is on the screen and in the video description. Thank you for watching, and don't forget to like, subscribe, and share.